Welcome back to the Humble Market Timer YouTube channel. Once again, if you enjoy the content, please like, comment, and subscribe. Today's video, I want to focus on Fannie Mae. Even though Fannie Mae has already made a pretty sizable move off its bottom, I still believe there is a ton of upside in this company, and I want to break it down for you as best I can via the technicals for the most part. Before I go any further, here's my disclaimer. Once again, these are my sole ideas, not investment advice. Now, Fannie Mae is the leading provider of mortgage financing in the U.S. In other words, they buy the mortgages from the lenders that lend to us. And they buy those mortgages so that the bigger banks and the mortgage companies have the capital to lend out more money to people like you and me. And it's a very critical company that was created. But in 2008, in the financial crisis, they fell on hard times with all the subprime issues and things of that nature. And the stock, for the most part, tanked. It was in that $60 to $80 range, and then it fell all the way down to below $1. And basically, to keep the company from just completely failing, the government stepped in and bailed the company out. And as a result of the bailout, the government received a ton of warrants and other aspects that potentially they could profit from later on down the line. And we are finally getting to the point where there's a potential for the government to recoup on that bailout. Now, there has been great anticipation and expectation that eventually Fannie Mae, also known as ticker symbol FNMA, would eventually work its way back into the major exchanges. Right now, it's kind of been fluttering on the OTC market or over-the-counter market. And when a company is there, yes, they have access to capital markets, but not at the point where most companies would like. And there are several institutions that won't allow their hedge funds and other financial institutions to buy over-the-counter stocks. So by it being on that exchange, it has been hamstrung from really getting access to the capital markets that it would be had it be on the major exchanges. However, as I've stated, there has been newfound anticipation, much of which has come from Trump, who seems determined to bring Fannie Mae, and I'm not going to talk about Freddie Mac, which is also similar to Fannie Mae. I want to focus on Fannie Mae, but Freddie Mac is pretty much a sister or brother of Fannie Mae. They just lend to more community banks, and Fannie Mae deals more with the bigger commercial banks. So that's really the only difference between the two. But for the sake of the video, I'm going to focus on Fannie Mae. But Trump is determined to bring Fannie Mae and Freddie Mac back to the public markets on the major exchanges. And there was something that leaked out through one of the articles from the Wall Street Journal on Friday that caused the stocks to spike. And this weekend, Trump has come out through his social media platform and put out this picture, which the U.S. Director of Federal Housing also tweeted or put on his X account. And basically, they want to clearly rename Fannie Mae and Freddie Mac. They want to rename them to the Great American Mortgage Company. He's already got a ticker symbol that he wants it to be under. He wants it under MAGA, and he wants it listed on the New York Stock Exchange, and he wants it done by November. So all of these things are really ramping up the possibility of Fannie Mae and Freddie Mac going back on the major exchanges and really having those companies have the market capitalization that it truly deserves, as opposed to being somewhat suppressed with it being on the OTC market and it being solely government owned. So now let's look at the chart of Fannie Mae. As you can see, it has made some major moves starting in the first part of 2024. It has really moved, and you can see from the chart that it has been had a series of bull flags. There was a bull flag that started here and it popped, and then there was another bull flag where it consolidated and then popped. And we've been in the midst of another bull flag since May, and it has been consolidating the past 2 or 3 months. And all of a sudden, we've got news from Trump that there's really going to be a major push to get this on the major exchanges. As a result of the leak on Friday, the stock popped quite a bit, 20%, and then Trump doubled down this weekend from his social media posts, which will confirm many of the rumors that were out there. And many people believe that there will be a sharp increase in the price of Fannie Mae because of this newfound emphasis and push to try to get this done by November. I believe the move that we had on yesterday is very similar to what you see where we had these arrows here. You can see that there was a big candle before the breakout. Here, it consolidated a bit before the breakout. In this scenario, a big candle, and then pulled back for a day and then broke out. I think you may see something similar, or it may just break totally out of this parallel that it's currently been in. And I think that the potential for a huge move is big. Just to kind of do some Fibonacci retracing, if you look here, you can see that from the last move that it made, the stock it popped and the stock dropped to the 618. It bounced off the 618 multiple times, and now it's starting to move up. That's a very bullish sign. From a Fibonacci retrace standpoint, you can also see based on the RSI, we bottomed on the RSI here on the daily chart, and you see that it's moving up, and it has a lot of room. Right now, the RSI on the daily chart is around 60, but if you notice at the top of each pop, the RSI has always gotten in the 80s. So you see right here, it's in the 80s, it's in the 80s here, it's in the 80s here. And I believe that we're headed back to the 80s again. So on many technical standpoints, things are looking very, very bullish, even though, again, the stock has already made a significant move off its lows. Just to kind of give you an idea of potential moves, oftentimes you can determine at least the minimum move for a stock once it has broken out of a parallel or out of a consistent time of consolidation. You can take the width of the point in which it consolidated and move it to the breakout point, and that will tell you typically a minimum amount in which the stock will continue to move once it breaks out of the parallel. As you can see here, oftentimes it moves much higher than just the width of the parallel, but the width of the parallel can give you a good, at least minimum, a good floor for the potential move in which the stock is going to make once it breaks out of that parallel. And as you can see here, you're looking at a minimum move of in that upper $13 to $14 range once we break out of this parallel. So be on the lookout for that. If we have a major push tomorrow, we may gap out of the parallel, potentially at the current high, which is a little below 12. There may be some resistance there, but if we can push through that, I believe we'll see another move all the way to at least 14. Keep an eye on that. The move could potentially be much higher with the anticipation that's taking place for potential IPO in November. So this could have major upside and not just be stuck at just 40 to 50% gains. We're currently at about 10 now. So be on the lookout for that. But I believe this is a stock that could potentially reap great rewards for those who get in now, even though it's already made quite a run. Hope you like the video. If you like it, please like, comment, and subscribe. Thanks for watching.